Warren Buffett is one of the most venerated names on the billionaires list thanks to his insight into investing. Buffett always seems to pick superior stocks with high dividend yields. His strategy has been replicated the world over with remarkable success. You don't need millions or billions to start investing in dividends. Here are the best dividend stocks to consider investing in, starting with just $300. Number 1. Occidental Petroleum. Warren Buffett has a unique philosophy regarding dividend investing. Buffett emphasizes simplicity, sophistication, and common sense. As a result, Buffett does not thoughtlessly invest in dividend stocks that pay the highest yields. He invests in companies with outstanding business models that are likely to keep growing to ensure that investors continue earning for years.
The answer is I do believe in dividends in a great many situations, including many of the ones companies in which we own stock. The test about whether to pay dividends is whether you can continue to create more than $1 of value for every dollar you retain.
Occidental Petroleum is the first company on the list, and for a good reason. Berkshire Hathaway has a significant ownership stake in the company. The company's annual dividend yield of 1.2% may not be among the highest dividend-paying companies. However, it is easy to see why Buffett is betting on the company's dividend. Inflation increases the price of commodities, which in turn increases the revenue realized by energy firms. Increased revenue translates to increased profits. Occidental Petroleum guarantees investors regular payment of dividends, thereby making it attractive for long-term investment. Further, the company's outlook is good thanks to the stability of oil prices. You can invest just $300 in Occidental Petroleum to start building your portfolio and follow in Buffett's footsteps. It is best to remember that dividend investing does not require greed. Buffett is a living example of a smart investor when it comes to choosing the right stocks. Be sure to pick the stock that has the potential to grow over time rather than one that is already through the roof.
There are many businesses. Take See's Candy, which we own. See's Candy has paid everything virtually out to us that they've earned because they do not have the ability within See's Candy to use large sums, which they earn, intelligently in their business. So it would be an enormous mistake for See's Candy to retain money. So they distributed Berkshire, and we hope that we move that around in some other area where that dollar becomes worth $1.10 or $1.20 in terms of present value terms.
Number 2. American Express. Warren Buffett warns against taking unnecessary risks, especially when the risk involves losing money. I know there are risks involved in any venture. For this reason, invest in a tested and proven stock like American Express. Currently, the company's dividend yield stands at 1.4%, which is far more than the 0.5% dividend yield that Apple pays. Adding the company's stock to your portfolio would offer the right stock diversification. The company's profitability has picked pace again after difficult years of the pandemic. It is important to note that the company's core segments are travel and entertainment. The clientele base of American Express comprises higher income earners who tend to show resilience even when the economic landscape is challenging for everyone. The bottom line is that investing in the company's dividend is not only secure, but also guarantees future payment of improved dividends. Unsurprisingly, Buffett trusts the company's stock. If you would like $300 a month, I would recommend this stock. The yield may not be the highest in the short run, but you are sure that you will be rewarded with dividend payments every year. In addition, this stock has great potential to explode in the coming years. Number 3. Louisiana Pacific, LP. Warren Buffett acquired Louisiana Pacific at the end of 2022. Since then, Berkshire has acquired more stake in the company. What has Buffett seen in the Tennessee-based manufacturer of building materials? If you understand Buffett's investment game, you are right to guess that there is value in LP's dividend stock. The company currently pays 1.6% as a dividend yield and has great potential for growth in the future. Construction of new home and multifamily projects is already gearing up after recovery following the pandemic. Therefore, Louisiana Pacific has a promising business outlook concluding 2023 and entering 2024. So far, LP has shown consistency in paying high dividend yields. Further, the company is increasingly reorienting its business by specializing in segments with great growth potential. Some people are not yet convinced that Buffett has invested in the right dividend. Buffett says, "Be fearful when others are greedy, and greedy when others are fearful." If you are convinced that Louisiana Pacific offers the best dividend investment opportunity, then it is time to make a move and start investing $300 into the dividend each month. Number 4. Coca-Cola. Coca-Cola is one of the lucrative dividends that Warren Buffett and Berkshire own. Berkshire acquired the Atlanta-based multinational corporation in 1988. Currently, Coca-Cola rewards investors with payments of 2.9% as dividends each year.
What excites you these days in technology, innovation, new businesses?
I like this one. And when I joined the board in 1988, I don't remember the exact figure, it was a whole lot less. And you've got fewer shares outstanding now, and you've got way more per capitas, and you're gaining share around the world. So those are the kind of businesses I like.
The return may not sound to be lucrative. However, simple calculations show otherwise. If you invested just $300 a month in Coca-Cola 20 years ago, you would have $17,400 today. Suppose you had invested more. Buffett and Berkshire earn more than $700 million in annual dividends from Coca-Cola. You now understand the value of the company's stock in Buffett's portfolio. Number 5. Bank of America. Another recommendation and must buy is the stock from Bank of America. The main reason for this recommendation is that the bank has proven consistency in dividend payouts. Berkshire's second largest ownership stake is in the bank, with the largest holding being Apple. The bank finds itself on our list because of its dividend yield of 3.2%, which is more than double the S&P dividend yield of 1.5%. Apart from the attractive yield, another reason to invest in Bank of America attractive is that the bank has strong deposits. The implication is that the bank will be able to realize more profits over time and reduce its losses. Investing in the bank's stock can, therefore, be considered a safe bet. Number 6. HP. HP is valued at $29.2 billion, and its dividend yield currently stands at 3.5%. which is decent relative to the S&P average of 1.5%. Although Warren Buffett started investing in the company a little more than a year ago, Berkshire has grown to become the largest investor in the California-based multinational corporation. As proof of the power that Buffett yields in the market, his move boosted HP's share price by 15%. Are you looking for a secure stock? HP could be your answer, provided you are patient enough. The generosity of the company when it comes to dividend payouts is one of the reasons to invest in the company. The valuation of the company is another factor to attract you in following Buffett's footsteps. The implication is that the company is in a position to continue paying high returns. Investing just $300 a month in HP's dividend would pay off over time if you hold steady and remain patient, as Berkshire's CEO emphasizes.
I was confounded by the fact that we could buy into these companies and in effect have an earnings yield of maybe 14% or something like that with dividends that would grow. They actually grew 70% during that time. And the people were investing their money at 0.25% or nothing.
The risk of recession looms over the stock market, which is the main risk to consider before you invest. HP's financial strength, coupled with impeccable leadership, is what gives investors like Buffett confidence in the stock. The possibility of recession is why we are only recommending stocks that consistently pay out. Number 7. Chevron. Energy stocks continue to outperform the market and are predicted to continue performing well in the market. Warren Buffett has not made secret his admiration of Chevron. Other investors have followed suit, and you should not be left behind. The dividend yield of 3.8% is high enough, considering the consistency of payouts. 2022 marked the 36th consecutive year of payment of dividends by the company. Chevron's leadership reiterates that payment of dividends is top of its financial priorities. The company's $302 billion market valuation makes the company financially strong, something that assures investors that they will continue enjoying hefty returns. The cherry on top of the cake is that the oil giant's shares are down in 2023, meaning you can reinvest your earnings in exchange for more shares. There are enough justifications to start investing $300 to buy Chevron stock to begin your investment journey. Number 8. Kraft Heinz. Kraft Heinz has an annual dividend yield of 4.5%, almost 3 times the S&P average. Further, the Chicago-based company pays investors quarterly. In his philosophy, Warren Buffett emphasizes the need for a circle of competence when making investment decisions. With this phrase, Buffett urges investors to play within the confines of the market they have perfect knowledge about. Therefore, it will not be fair to recommend Kraft Heinz's stocks without telling you something about the company. We value you as a loyal consumer of our channel's content. Please take a moment to click on the subscribe button before I tell you more about Kraft Heinz and why you should invest in their dividend stock. The company's products include famous brands such as Heinz Ketchup, Kraft Mac and Cheese, and Kool-Aid, among others. The company has a strong presence in the packaged food market. Kraft Heinz has significant pricing power in the market, meaning it can pass substantial costs to customers without risking losing customers.
So Buffett acquired his stake in Heinz in 2013 because he thought that those companies fit Berkshire extremely well. He paid not much money up front, $4 billion in cash and $8 billion in preferred shares that paid a 9% dividend.
As a result, Kraft Heinz has consistently grown its revenue and profitability in the past years. That is the good of the company. On the flip side, the company's stock has held steady for several years. Ideally, you should not expect growth of payouts anytime soon. At least, that is what the statistics show. Is Buffett right to invest in the company? Well, time will tell, but considering the billionaire's track record, the company may beat all the odds to record growth. Nevertheless, high yield and consistent quarterly payouts should attract you to invest in the stock. Number 9. Paramount Global. Paramount Global boasts some of the greatest movie stars, including Tom Cruise, Leonardo DiCaprio, and Shia LaBeouf. As a result, the company's streaming platform has witnessed significant growth in the past couple of years. The company added about 10 million new subscribers in 2022 alone. To say this feat exceeds all expectations would be an understatement. The streaming market has become a hard nut to crack, even for giants like Disney. The achievement of Paramount Global is simply incredible when you consider the performance of other players in the market. Paramount has realized increased revenue, something that has enabled it to reward investors by paying them 4.2% as dividends. The company has proved to be a secure dividend stock because of consistent payouts. Again, the company's growth has been remarkable over the years. It is easy to see why Warren Buffett trusts Paramount's dividend. The dividend yield, coupled with the high yield, is enough to convince you to put $300 a month on the stock. It is essential to note the drawbacks of investing in Paramount stock, mainly because of the slight slash of the dividend it paid in May 2023. Such a move signals doubts about the growth of the dividend anytime soon, as far as the current trend is not reversed. Although the reduction in the payment of dividends may not be great news for investors, it could be explained as necessary considering the high previous payments. Nevertheless, I advise you to take caution before you choose the dividend stock. It will be interesting to see what Buffett and other heavyweight investors have seen in the stock. Number 10. Citigroup. It is essential to invest in the right stock when starting with a modest investment of $300 a month. The right stock is the one that helps you make money while reducing the overall risk of your investment. Citigroup meets these two conditions. Its dividend yield of 4.5% is high enough to make you good money over time. The dividend yield has grown from 3.9% in 2022. Again, the bank has consistently paid investors quarterly dividends for more than 3 decades. The greatest strength of the bank is its broad customer base and geographical reach. The bank serves about 200 customers in over 160 countries. For this reason, the bank can be considered an established entity with great growth potential. Conversely, the group's strength can also be its greatest weakness. Ideally, operating in multiple jurisdictions means that the bank is subjected to many regulations, which make compliance not only complex but also expensive. This means that the bank's growth may not be as fast as possible. Despite this weakness, the bank is a good bet for prospective investors. The high and consistent payouts are enough to persuade you to invest in the bank. If you enjoyed watching this video and want to support the channel for more great content, please consider liking, subscribing, and commenting below. We would like to know which passive income source is the best. Turn on notifications on this channel to get notified of the newest video we upload regularly. Thanks for watching.